Hello everyone, and you're watching Bitcoin Bubble news channel. People need to be very careful about how they look at the markets because when too much Bitcoin is held by a few hands, things can go badly when those hands decide to move. What's interesting is that I think a lot of new derivative financial products will come out in the next 6 to 12 months. These will let people trade. Basically take a risk and protect yourself from that risk in the same ways that people can do with other goods. Bitcoin only trades based on how much people think it is worth and how few of them there are. The price of Bitcoin changes a lot, twice as much as the SP or the SDAC, but look at how quickly it goes back up. It's not run by anyone. Yes, this is what makes Bitcoin such a pure and beautiful purchase. This is why states should be able to invest in Bitcoin without any problems. Fred Thiel starts by talking about liquidity risk, which is one of the biggest risks the Bitcoin market faces. Bitcoin is not like regular markets where there is a lot of liquidity. It is an environment where not many transactions happen. Thiel says that the Bitcoin market can be split into two parts. The open market, which is made up of sites like Coinbase, and the over-the-counter OTC market. Exchange-traded funds or ETFs, which are becoming more common, work on a T+1 basis. For investors, this means that when they buy Bitcoin ETF shares, the Bitcoin is bought after the market closes or the next day. There is a special risk that comes with this delay because the price of Bitcoin can change a lot between when the shares are bought and when the ETF actually buys Bitcoin. In the next 6 to 12 months, Thiel thinks that a number of new derivative financial products will come out. Investing in these tools will protect people from the risks of the Bitcoin market. This video has been liked, subscribed to, and post alerts have been turned on. Please take a moment to do these things. You can also watch our other videos about cryptocurrencies and digital assets in general. Please share your thoughts and comments in the part below. For the channel's growth, everything you do is very helpful for the YouTube system. Thanks and have fun with the movie. Then there's the over-the-counter business. Most of the time, the ETFs work on a T+1 basis. If you buy ETF shares on Monday, they will buy Bitcoin after the market closes or the next day, and it will settle the following trade day. That is, if you buy shares on Friday, they will be bought again on Monday. This is what happens to Bitcoin over the weekend. Can change how much Bitcoin costs when they buy it on Monday. A lot of trade goes on around that. As the amount of Bitcoin in ETFs rises, and you consider how many small buyers there are, bad news stock markets drop. The Nasdaq, SP 500 or any other index drops 10%. Well, even if they all decide to sell 10% of their Bitcoin at once, the open market is still not very busy. That's why you'll probably see a bigger drop when there is one. And the OTC desk might not be able to handle that much traffic. That's why people need to be very careful about how they watch the markets. When too much Bitcoin is held by a few hands, those hands will move when they make a choice. There are times when things are much more violent than they should be. I think that in the next 6 to 12 months, a lot of interesting things will happen. There will be a lot of derivative financial products that will let people trade risk and hedge risk in the same way that they can trade other commodities. There are many ways to lower your risk in the oil business. This is something we'll see more and more of with Bitcoin as a way to make the market much more open. Because think that in the future, the US government owns 2 million Bitcoin, which is 10% of all the Bitcoin that are out there. Saudis, Russians, Chinese, Indians, and other countries decide to own 20% of the company as a whole. That means that 30% of all the Bitcoin in the world is no longer for sale. You could say that at least 70% or about 4 million Bitcoin of the keys are lost. Like Satoshi's bank and such, right? Right? That's another 20% or so. Now you have 50% of the Bitcoin locked up. After that, through the ETFs. As for the micro approach, it's already at 1% or 2% and going up. Now you're kind of at 60%. The market doesn't have a lot of money in it. You need to get in now because things are going to get harder later. You should also know that the market will have a huge need for these derivative products. Because of this, the amount of money that is speculated on Bitcoin as a financial asset will grow by a huge amount over the next few years. But Bitcoin is different in a way that I don't think many people know about. The other thing is that other goods can be used up. Gold is used in industry to make jewelry and other things. Oil is used up metals, and so on. And with financial tools like stocks, they change based on how well the companies that the shares represent do. Also, this point of view that Bitcoin is backed by something has been around for years. Bitcoin doesn't stand for anything. That's so beautiful. And that is that Bitcoin only trades based on how people feel about its value and how few of them there are. Always, that's it. Because of this, it's a much more honest way to spend. The price of Bitcoin changes a lot, twice as much as the SP or Nasdaq, but look at how quickly it goes back up. Yes, as soon as Tesla reports bad earnings, the stock price goes down. You'll have to wait until the next earnings report before the stock price likely starts to rise again. Mt. Gox or the German government sold all of this Bitcoin a few weeks ago. The price went down and then back up again. Just look at the price drops and how quickly the market has taken the large amount of Bitcoin that has come into it. The price has then gone back up. To show how much people want Bitcoin, that number shows how healthy the Bitcoin trading market is right now. And I think that the idea of these cycles that we've had before, 4-year cycles, will fail and the mines will give up. The miners don't have much of an effect on the price of Bitcoin right now. All they do is hold a lot of Bitcoin and sell it. But the number of Bitcoin miners that were made every day, putting something on the market, is becoming a less important part of the process. So now it's just supply and demand. And the best thing about Bitcoin is that, when you buy Marathon stock, you're putting in the management team and my ability to run the business. It's not run by anyone. Okay. This is what makes Bitcoin such a pure and beautiful purchase. Because no one controls Bitcoin, this is why governments should feel safe engaging in it. Yes, right? Yes, it's just supply and demand, or how the market feels. As more countries realize how important it is for their own security to hold Bitcoin, mining could become less centralized. He says that any country that wants to hold Bitcoin will also want to have sites that mine Bitcoin inside its borders. This could make mining much less centralized, which would force miners to work faster and be more competitive. Changes like this could have big effects, changing how Bitcoin is mined and making Bitcoin an even more important global reserve currency. The US has more gold than any other country in the world. Even though gold isn't used to back the dollar, it gives the US more power in the financial markets. Gold is also held as a backup by other countries. Interestingly, it was having gold that made Nixon separate the dollar from gold. Other countries were pulling their gold out of the US system because they saw how much the US was spending and thought it would go bankrupt. The US government has a lot of gold. They own more land than anyone else in this country. They have a stake in about 28% of the country's land. The petrodollar agreement, in which commodity producers agreed to price their goods in dollars in return for US protection, just ended. They used the money they got from this agreement to invest in US treasuries. That is no longer there. The US has become less important as a reserve, and it is now less than 50% less valuable as an asset for keeping. China no longer buys bonds but gold instead. Japan was one of the biggest buyers of US bonds when they were having money problems, but they have stopped buying as much now. Tether, in a funny twist, is one of the biggest users of short-term treasury bills, right? They come in 6th place for buyers. It's funny that they buy at the nation-state level. The US needs to find a way to pay off its debt, and if people aren't buying dollars or putting things in dollars,